Hello everyone and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Wednesday, October 7th. Good to be with you guys this morning. Graham, Mark, Mario, Eileen, good morning to all of you. Valentina, always great to see you. All right, so lots to cover. There's so much going on. You can see that there's been excess of charts on the intraday and swing updates as of late. We're seeing some nice moves here that we're tracking, finally getting some of this dollar weakness. Graham saying there's no video. Sorry about that. There we go. Sorry about that, guys. So relative performance so far versus the dollar. You see the Kiwis top performer 1.51, percent on the day. Aussie up 0.9. Both those charts were highlighted yesterday on the intraday. Pound 0.57. That long that we were in yesterday on the intraday basis closed out overnight. So we'll talk about that trade. And the Aussie yen and Euro CAD trade. Euro CAD's been a little bit of a disappointment, but we'll talk about that in a moment. All right, let's jump right in. As always, guys, question, trade setups you want to review, please feel free just to throw them on the message board, and we'll be more than happy to take a look. So a quick talk about where we are. You know, you're going to hear Jamie talk about this later this afternoon in the midweek strategy webinar at 1 o'clock. But there is a story to tell here in that all of the risk is essentially moving together. Okay, whether you're looking at Chinese large stock moves, or whether you're looking at broader risk in the S&P, the commodity trade, the commodity currencies, all seem to be moving more or less in a nice coincidental move, let's call it. So we'll go over some of those trades as well. First things first, here's what Kiwi looked like last night. Or let me take a step back before we jump into Kiwi, just relative performance on the dollar so far. This is what the intraday chart looks like on the dollar. We've been following this daily. And if you remember, on Monday, we were talking about the fact that we were really struggling to find any sort of meaningful pullback off of the median line off the highs. We've adjusted the median line off the high from last month to just the high off this month. It angles the slope a little bit more, gives a little bit more room to play with, and it also preserves the highs that we made within the confines of this formation. So we'll be looking for support at that 100-day moving average, comes in around 11,965. A little bit lower, you have the 618 retracement of the advance off of last month's low. That comes in 11,956. At this point, we're still going to favor the downside while below 12,028, which was last month's open. Okay, over the next few days coming into the end of the week here, that's going to coincide very nicely with that upper median line parallel. On the intraday, looking at this at the 30-minute chart, here's the formation that we were following last week. You can see that we did see a topside break, but a sliding parallel of that same slope caught the rally earlier this week. And here we are again, trying to make our way back below the median line. So we've completed a 50% retracement from that advance off last month. Like I said, 11,956, the 618. Just ahead of that is that 100-day moving average. So keep those levels in view here for the dollar. Near term, again, the bearish construct remains in play below that 12,028 level. Raj saying, Mike, is this a good time to look for a rebound in dollar CAD as dollar is at support? Possibly. I'm not really looking to play the rebound in dollar CAD, Raj. If the dollar CAD does give us a rebound, I'd be more favoring selling that than necessarily trying to play the rebound. It's still a possibility from a scalp perspective for sure. We'll go over dollar CAD in a moment. But in general, he says, I was thinking about scalping along. Sure. Yeah, we'll take a look at the intraday chart in a moment. In general, I am expecting to see sometime either today or tomorrow some sort of rebound in these that we can sell. Same thing with risk. You expect to see that risk could stretch into a new high, meaning the S&P could stretch into a new high, maybe 2,000, and then we'll look to play the downside again. That would coincide with you know, a pullback in some of these commodity pairs that we've been trading, a pullback in Kiwi to get long, a pullback in Aussie to get long, a pullback in CAD, meaning dollar CAD rally to get short, right? Raj saying permits just came out, negative 3.7, could be the day, I think. Yeah, the data that just came out you're talking about, it's not too big. Here's what it is. Let me just show it to you right on the terminal here. So what Raj is talking about is building permits for Canada coming in at negative 3.7. We're looking for a print of 0.3, low priority print. So I don't think you're necessarily going to see too much volatility on it. But let's just segue real quick into that since you're interested in that. Here's what I'm looking for, and the only reason I don't like trying to play the long yet in dollar CAD is because I don't really have a support structure here to move off of. Here's what the daily looks like. Okay, well, we moved just below that. What level was that? The low 130.11, which is the stretch lows from September. So you're not really at a support structure. If you get a near-term opening range break to the upside, you could try to play it. ATR is pretty tight. You'd be looking for about 25, 26 pips. But generally speaking, this is an area, Raj, where I think I'd be a little bit more interested in trying to play a rebound. This is the August low. It's the 38.2 retracement of the advance off of the June lows and current operative lower median line parallel. All coincide right around that 29.48, 29.50 level. So I think that would be a little bit more convincing or more appealing, I would say, to play the rebound. Does that make sense, Raj? So for that reason, I'd probably look to see if we can get that stretch in 29.50. If not, you have been getting some divergence into the lows. This is the trigger I'd be watching on the 30 to play the long side here. Again, about 27 pips per scalp. He says massive divergence on the 4-hour too. Remember, good point. You can see it here on the 30. I'm going to bring in the 4-hour just to show it. But good point. And then I just want to bring out, again, we need to be very careful in that divergences doesn't help you with time. Waning momentum can continue to go on for days and weeks before you actually see the break. Now, obviously, in a 4-hour chart, you're not going to expect that type of time period. But just to put things in perspective, divergence doesn't give you the timing. On a divergent signal that we got into the highs here, right? You didn't see the breakdown for another, well, these are 4-hour charts, for another day or so, a couple sessions before we actually broke to the downside. So just keep that in view. Also, one other thing, and I can only, press this as much as my personal experience, but if we're looking at a 30, if we're looking at a even a near-term chart, very rarely will I start to jump into position while the momentum signature is in oversold condition. And that's essentially what it is on that 4-hour chart that you just brought up, right? Something can stay in oversold condition for quite some time. The condition of being oversold is when you'll see the steepest drops. So, I definitely need to see that start to come back above 30 before I even start to try to counter trend trade, which is essentially what you'd be looking to do on this, Raj. All right. Great questions. Great questions. But just a note of caution here before you do. Raj says yes. All right, cool. We're on the same page there. Give me a second here. My charts need a second. All right. So any questions on the dollar CAD? It wasn't highlighted on the intraday charts, but always willing to jump into some analysis here if you're looking to take the trade, guys. So feel free to throw them out. Again, a move down into 29.50 and then a rebound would be a little bit more convincing to play the rebound, and I think that rally would give us a much better opportunity to get on the short side. If you are scalping this intraday, if you're holding shorts, just keep in mind we've had 1, 2, 3, 4, 5, 6 days to the downside in a row now. In fact, we can bring up an indicator called consecutive bars available on fxcodebase.com. And if you look back, when's the last time we saw a 6-day decline? Was back here, June 16th. What happened there? You saw a very small rebound. What was that? From 108.40 to about 109. So about 60 pips, and then you saw continuation lower. So it certainly continues to suggest that we should be looking lower, generally speaking, but you did see a little bit of an interruption here for a 2-day pull higher. So just to put things in a caution, it would match up very nicely with maybe a stretch into a low today, a little bit of a recovery, and then we'll look to get back on the short side for dollar CAD. All right, so let's jump into, I guess we'll jump into the British pound, because I do see a question here from Cameron. So the pound wasn't on the intraday charts either, but we were talking about that in the webinar. Long, or I should say swing trades are still in that long. Here's what the British pound looked like on the daily. And we'll go over this scalp chart in just a moment. So to answer your question, Cameron, saying sterling dollar is at resistance and divergence on the 15-minute charts, your view, please. I completely agree with you that we're at resistance near term. I want to point your attention again to this long dated formation. We've gone over this a couple of times here in the webinars, but this dates back to the January open 2013 highs. Okay, the lows for the year that you set back on the March trade month, last year's high, and you can see the meaning line, how many times we've pivoted off that region. Okay, not only that, but more importantly, the operative or former ascending formation off the low now coming into some resistance. So this region ahead of schedule, just that we were highlighting this earlier in the week, is near-term resistance. You're absolutely right. Momentum also has a trigger here dating back to the highs from August, which we're looking for as well. So you can see this thing stretch higher as high as 53.40 is what you want to be looking at. Today's high so far is 53.16. And yeah, I would be starting to look for short triggers up around this region. Here's what the intraday chart looks like. Okay, so a basic 38.2 gets you 53.17. The upper median line parallel for the formation just off the last few lows here. Kind of dilly-dallying above it right now, but you can get the idea. A little bit ahead of schedule on the sterling as well. We got out at 52.80 last night, or the scalp, I should say, from the intraday trades got out at 52.80 last night. So here's what we're looking at. Let me just bring it to you simply, Cameron. Here's what I'll be looking at on the 5-minute chart. British pound, here we go. So you are getting some divergence into the highs. I was looking at that earlier today. This trigger looked like it had broken, but we hadn't cleared the European opening range high, so there was no trade to be had there. At this point, the divergence signal continues to remain in focus, higher high. These 2 points aren't divergent, but you're still focused on this divergence, and that puts emphasis on this high. Okay, so if you do get a short trigger, again, it would be counter trend, so you want to be light, reduce your leverage on the downside. But if we do get an opening range break to the downside in the United States, I tack on a quick retracement, start playing those downside levels, looking for about 30 pips per scalp. So we exited here, like I said, just ahead of that 52.87 level. 52.80 was where the limit was. That hit overnight about an hour almost into European trade. Obviously, Market Scope doesn't show you the previous exits from the previous day, but as I said in the webinar yesterday, 52 was the first exit, and the limit hit at 52 for half that position. The rest got taken out in overnight trade. 52 was just this median line right here, off the lows that we were talking about in the webinar. And it was the retracement, the 618 of the decline. Okay. So either way you look at it, sterling is poised for a possible pullback here. If we break higher, it could be a way more substantiated rally. The first level I'd look at is a 50% retracement off of the September highs, and that would take you into like 53.80. All right, so you have the invalidation level at 53.40, a topside break, look for 53.80, 54.50 would be a confluence with that upper median line parallel. But broadly speaking, I would be looking for some resistance up into this region. Cameron, does that help? Let me know if you have any questions beyond that. He says, yes, thanks. You're more than welcome, sir. Let's see if we have any decent triggers here. Yeah. So one other thing you want to just pay attention to, Cameron, we're trying to play a counter trend trade, is you want to see not only that divergent signal, but you want to see some waning momentum. So the first thing I'd be looking at is if we look back in price for the last 3 sessions here, we've continued to hold on the 5-minute basis. This is big. 60 is support on every approach on the downside. Keeps the focus to the upside. You had an overbought signal here. So we'd need to see a 50 break, a 40 break to shift the broader momentum lower. Now, obviously, you don't want to wait for that to get the entry, but you get the picture of what the kind of things that we want to look for to get validation of the shift in trend here. All right, so that is the British pound. Any other questions on the pound, feel free. He says, very helpful. You're more than welcome, Cameron. You're more than welcome, my friend. Great questions. All right, moving right along. Now let's jump into the highlighted pairs from last night. First things first, let's take a look at the Kiwi Dollar. It's a great trade. I think another one that may be coming into some near-term resistance. Well, wow, did that just happen? No. Snap these lines for you real quick. There we go. So the 65.95 level was the confluence region that we talked about in last night's setup. The top side targets that we were looking for was 86.87 into 86.96, and that was basically the 764 retracement, the upper median line parallel for the formation that we were looking at. Remember, the break here was on the 2nd. We started off the week bouncing right off the median line, and this confirmed a break of last month's opening range, which never gave out. So objectively speaking, looking at price action, you'd be looking higher. Also, we talked about the fact that you had talk about radical divergence earlier in the session, Raj. Here's some serious divergence too on the daily chart. You can see this took 3 months before price turned higher. But here's the first 50 break that we've seen since back in March, and that led to a nice rally, test the 2013 highs. And we're now testing 60. I was just trying to look back to see when the last time we broke 60 to the upside from oversold conditions was back here. From oversold conditions, a break to 60. That one quickly saw a recovery, but we pushed into a new fresh high subsequent. So you're at risk for a little bit of a pullback here. I don't want to stress the daily chart here, although we always want to keep it in view. Next level up, 66.78 on the daily chart is going to be the high day close from August. So keep that in view. The intraday chart has been the cleaner of the two. So here's what we looked like last night, and here's what we look like now. The bullish invalidation level still remained down at 64.60, 64.50. We were looking for long triggers while above that sliding parallel that caught the lows earlier. Sorry about that, guys. Got a little sidetracked. So the confluence region first here at 65.80, and the following 65.95 level is what we're looking for. Is what we were looking for last night. Now that we're above that, that's going to be near-term support and the immediate upside invalidation level. Okay, so if we break below this, look for a drawback into 65.60, look for a drawback into this region. We're going to go ahead and raise our bearish or bullish invalidation level rather to that same region along that same slope. 66.50 would be an 88.6, but just beyond that, 66.80, 77, guys. I'd really watch that high day close from August. So still looks pretty good. You are getting divergence, but remember, divergence above the extremes or below the extremes, meaning above 70 or sub 30, typically weak signals. So I don't want to stress it, but the hallmark or the initial indications are there. Might be a little pullback here for the Kiwi. Let's bring up the 5-minute chart, actually. We might have something here. Yeah, off the session lows from Europe. Looks pretty decent. We're not necessarily at resistance, so let's see how this looks into the open of U.S. trade. But if you get that spike back into the 88.6, might be a decent move here if we continue to maintain that divergent signal. Yeah, so beware of the long side just yet. Even if we do get a pullback, we'd still be favoring the long side while within this formation. But near term, with some waning momentum, both on the 30 and the 5, use a little bit caution here if you're holding any longs. So still very clean within the confines of that operative move. On the upside, just to put things a little bit more in perspective, if we do see continuation here and dollar risk continues to sell off, or dollars continue to sell off, I should say, you're looking for the highs at 67.06. That's going to be the stretch high that you got from August. All right. Quick reminder, guys, again, for if you're newer to the room, you can always take a snapshot of any of the charts that you see here in the top right-hand corner by clicking on that camera. Also, one other thing I just want to interrupt real quick and remind you guys, we actually shot the video yesterday for the initial breakdown for IDO. We'll be shooting another educational video. I'll have both of those posted up hopefully by the end of the week. So feel free to mess around on that. And your feedback is crucial. We are in contact with IDO Search on a daily basis. So any feedback you guys have for changes, alterations, questions, we are very receptive. All right, so that is Kiwi Dollar. I want to jump into the sterling yen. We went over the sterling. Here's what sterling yen looked like yesterday. And another one that was just basically poised with a basic opening range for the week. Okay, the opening range high, we talked about this in the webinar. Actually, the reason I added this yesterday is because someone here asked about it. And it's very clean trade. It's a very clean opening range. You're looking for either a break above 83.19 or a break sub 81.86. A top side break, which is what was favored on this move. Targets 183.55, 184. Here's what sterling looks like, sterling yen right now. So the breach did look for the 85.53 or 55 target. 84.08 we just missed on this stretch. In fact, what caught it was the actual median line right off the low. The high here was 84.04. Okay, so just keep those levels in view, but looks pretty good. Objectively speaking, you'd want to stay constructive while above this region here, which is a basic trend line support off last week's low, and the objective opening range high for the week. A breach above or a breach higher, if it pulls back, we get another long position in there. 84.50, 84.45 should be a little bit bigger of an area of resistance, and that might actually offer a nice short opportunity. I'll bring your attention again to a nice confluence. These are my favorite confluence trades, guys. So 100% off the low with a 50 or a 618 off the high, and it happens to coincide with the operative upper median line parallel heading deeper into the week here, basically tomorrow, into the close of U.S. trade. So keep that in view. A little bit bigger of an ATR here with 46 pips per scalp, but broader picture for the sterling yen on the daily looks like this. So we're just rebounding off of this median line off the highs for the year. And the nature of the ascent looks pretty good. Now again, the yen's been sort of the laggard here, so sterling strength has sort of been helping this out and bringing this higher. So I wouldn't be surprised if the correction lower in sterling actually is a little bit bigger in sterling yen than it is in sterling dollar. Just keep that in mind. Dollar yen has been sort of a snoozer lately, boring trade. So we're going to wait to see if we finally get this consolidation break. Again, the closes are what matter, guys. I'm not even watching intraday price action in dollar yen until we finally clear this range. There's been too many false breaks to the upside, too many false breaks to the downside. You really need to see this thing start to level out. Any questions on sterling yen? All right. So while we're on the yen pairs, we went over sterling yen. Let's just touch really quick on the last radar chart from last night, and that was Aussie yen. Here's what Aussie yen looks like. And another one based on Aussie strength, obviously one of the strongest performers today that we talked about. Valenti says, I have followed the opening range. Could you please review the EuroCAD trade? Yeah, Bill, I will. Valentina, what's your question on the opening range? Do you want to give me a little bit more flavor on that for sterling yen? Okay, very easy. So markets will tend to put in an opening range on pretty much every time frame that you look for. On a weekly basis, I tend to look at the Monday-Tuesday stretch or the Sunday-Monday stretch. On a session basis, I'll typically look at the hour, hour and a half of trade, first hour, hour and a half of trade. Even on an hourly basis, guys, the first 15 minutes of the hour will typically set a higher low. You look for the market to test that, Valentina, and then the break gives you an objective bias. It's not necessarily a trigger for a trade, but it's a trigger to validate a bias. So we started off the week. If you note, Valentina, on all my 30-minute charts, there's going to be a vertical line that designates the weekly open. So here's your weekly Sunday open. We came into a low. We tested that low. Okay. We moved into a high. The high came in at 83.19. I'm not doing anything here, right? I'm just assessing what the range is. We came back to test the opening range low for the week, and we failed and turned ahead. Okay. In fact, we rebounded right off of the open. Last night, what we were highlighting here is that, look, we're coming right into, here's sterling yen, we're coming right into the opening range high for the week. And this is where we were trading. So you made a high, you tested the low, it failed, we're testing the highs. If this breaks, it shifts the bias to the upside, objectively, right? That's just shifting your bias. Now, entry for the scalp, that's where we go into the 5-minute chart. That's where we look for the triggers. That's where we look for price action to be much more, a much granular price action, right, Valentina? But this is a way of giving us an objective bias. So there's no emotions in it. Doesn't matter what I think, what I feel is going to happen. We just broke the opening range high, right? So objectively, that gives you an upside bias against the lows, looking for a Thursday, Friday high. Typically, when you see a downside break, you're bearish against the highs, looking for a Thursday, Friday low. Does that make sense, Valentina? And this happens on every time frame, okay? It even happens on the session open. So if I bring back the Kiwi trade, if you weren't long last night, you had another opportunity to get long. Here's the Asia Open. I'm sorry, this is the Sydney Open. Here's the Tokyo Open. But Sydney opens, puts in a high around 65.50, 65.47. Okay. The low at the Sydney Open was right here at 63.40. Okay, so you came, you made a high, you test the low, it turns, you break the highs, you're bullish against the lows, looking for a late session high. Well, we closed Tokyo right at the highs. You see how that works? We can get as granular as you want. Here is the opening range, or here's the range for US trade in red. US opens, you put in a low, or you put in a high first, you test the low, you break the highs, bullish against the lows, looking for a late session high. One thing I do want to note as we're talking about opening ranges is that this tends to be a strategy that works best in trending markets, meaning if you have a range and it's a well-defined range, don't even bother. You're coming into resistance, look to sell. Coming into support, look to buy. But in trending markets, breakout markets, and markets that have directional bias, the opening range for the session can be a very, very strong tell. Valentina, does that help? So that's on a session basis. We do this on a weekly basis too. The one thing, one note I want to make is this: we don't want to stress time as much as we do price action. So for instance, if we set a high and then the market sets a low an hour into trade, or 2 hours into trade, it doesn't matter. If we get a market that opens up and it just continues to drop down, the opening range is not going to help you. But we want to make sure that we have a high, a low, and then one of them has been tested before we define that. So whether that takes, the first 30 minutes of trade or whether that takes the first hour of trade, price is what matters. So Valentina says, yes, I appreciate that. I hope that helps and offers you a little bit more of a tip. Again, just another tool to help us on the intraday when we're looking to define our bias. Great question. She says, okay, all right. So to get back to the Aussie yen trade, we were coming into resistance at 86.04, 86.13, which was September open again. The bias remained constructive while above that region. That was key resistance the previous day that we had noted on the radar chart. We broke through it, and we were sitting at it as support. A trigger here, I didn't have drawn, but a trigger here gave out, and topside objectives really wasn't much until 86, 86, 86.95. Nice confluence region there. At this point, we just took that target out. Okay, in fact, the high here, we just hit it before this webinar high, 86.88. The extension was at 86.87. All right, again, just ahead of target, or a little bit delayed actually. But you raise your bullish invalidation level. We talked about that yesterday at 85. You're going to raise that at this point to the 86 handle, which coincides with the operative median line slope. Remember, we talked about this as well. Remember, this slope is the same as the slope that we took off the yearly low, off the September lows. So if you mirror that same slope with the new low from this month, you can see it's dead on. Okay, so we're going to go ahead and raise that bullish invalidation level down to 86. A break to the top side beyond here, you're looking at confluence resistance at 87.26, 87.36. Real strong momentum, real strong momentum. The more times you see penetrations above the overbought condition or below the oversold condition, the stronger the momentum behind the trade is. So I really wouldn't be looking to fade this until we get a pretty compelling break sub 40. That being said, I'd be more inclined to buy pullbacks in Aussie yen. Any questions on that? Mark Haverman says Euro Kiwi coming into support around 196. Let's see. Not a trade I've been following as of late, as you can see here. This whole consolidation mess had me really put off on this trade. So I don't have any recent analysis for you here. He says, oh, typo 169. Yeah, that makes a little more sense. Let me see what the near-term chart looks like. Hold on one moment. Okay, you can see at the high day close for the year. So ridiculous how many times this thing tried to break through it. No cigar. Finally broke below that median line. Here's the downside move. So here's what I want to look at. I just want to point out real quick. This retracement is not taken from the stretch high that we made on the 24th. It's actually taken from the close, for the high day close. I tend not to like, and we talked about this last week as well, or last month, I guess, when we saw all that radical run up. I tend not to like taking retracements and extensions off of emotional spike highs like this. That being said, Mark, I would just point out 69.67, the 236 basic off the low. Watch that, because on these two tips, you are getting some divergence. So ahead of the 69 handle, looks like you could see this thing show us a little bit more of a hold here. In fact, I do want to just highlight this trigger as well, which looks like it's basically giving out here. Wait for this candle close, but you get the picture, right? If this breaks, I'm on with you onto 69. I don't necessarily have a level there, but it's a big figure on a trade that's been in a range for quite some time. And just for argument's sake, if we were to take this retracement instead of from the close to the highs, bring in that 38.2. $67.90. I'd still be looking for a drop into that. So just some levels there for your consideration, Mark. Not something I've definitely been getting over or getting involved in over the last couple of days. Mark says, thanks. Always refreshing to see your charts. Hey, it's my pleasure, man. I like the trade ideas. Keep them coming. Good stuff. Okay. So sterling yen we went over, Aussie yen we went over, Euro CAD, who was asking about that earlier. That was highlighted last night as well. Here's what Euro CAD looks like. Look, you know, the broader, let me bring the daily into focus because I was a little frustrated here. I actually didn't take any trades on Euro CAD. I was looking for a decent entry, and then the thing started turning down and looking lower again, so there was really not much to do. Here's what we're looking at with Euro CAD, and I just want to highlight or point out that 45.60, 45.90 level, it is a bigger area of support, but so is the ATR here. 170 pips is what we're putting on a daily basis. We haven't really gotten for a tag of that yet. Momentum is sub 50 for the first time that we've seen. We went over that yesterday. Since February, that charged the decline into the yearly lows. And any longs that we take near term would be counter trend. Here's what it looks like on the intraday charts. So the focus was the rebound off this level. Why is that level important? Well, it's the median line off the highs, slider off the lows that you made in that dip in early October, caught the lows that we made here earlier in the week. You had divergence into those lows, followed by a trigger break, right? And this happened yesterday in Europe. That led to this charge here. Momentum, though, failed at 60, and that was something I was paying attention to, and I was looking for this trigger last night to give me an upside play. You didn't get any move on it. You didn't get any pop on it, even when the trigger gave out and the market just collapsed right below the trigger. So I didn't get on the short, the long didn't pan out, and here we are right back, right above that level that we looked at on the daily chart, 45.92, the beginning of that support range. So I really don't have a play here, guys. I still think it can get a pop higher based on Euro performance, but at the end of the day, we're still within the confines of this formation. So I don't want to get too excited near term. I do think it is due for a decent move to the or a decent recovery at least, but at this point, you're going to reduce your bearish invalidation level from 48.11 right down to 47.30. Okay, it's a 764 retracement. Not really the big deal. More importantly, the initial opening range low for the week and the highs that we spiked into yesterday. So does that make sense, guys? I know that the swing side of trades are still long with a stop against 45.90. I do like that 45.90 stop. It's right where I would want to sort of start to look off the long side. But even on the two lows that we just made, you're still holding that support. Not only was that slope support, this is what I wanted to say earlier, but kind of forgot. Not only was that slope support, but I'll bring your attention to the low stretch that you made back here in September and the highs that we made back here in August, right? So it's a big pivot region for price either way. You have the median lines in there, and this is why I can't really get too excited yet about the short side because we're above support. Can't get too excited about the long side because momentum just hasn't given us any type of decent topside triggers since that move yesterday. We'll continue to look for that heading into U.S. trade. Actually, it looks like a decent trigger is panning out now for the long side. Let's look what this looks like on the 5-minute. So on the 5-minute, again, failure at 60, failure at 60, keeps the focus to the downside. This is the first concrete rebound here we're seeing off of 40. So watch for that 60 break to the upside, watch for that trigger break. If we do clear on the up 46.60, you could be looking for a rally into 47.30. Remember, 43 pips, a bigger ATR here on EuroCAD is what we should be looking at per scalp. Any questions on EuroCAD? Cameron, you were asking about EuroCAD earlier. I hope that answers all your questions. Mario says, short trigger on Aussie dollar now. Let's bring up Aussie. And guys, there's no way I can there's no way I can effectively follow all these triggers throughout the course of the webinar. So please, by all means, if you guys see something panning out as I'm talking, don't wait for me to respond to your messages, because I do get a lot of messages on the board here. I don't want you guys to miss these trades. Yeah, the short trigger actually already gave out. This is what I was looking at earlier today. This short trigger, and then we came back and tested it as resistance, perfect resistance, and moved off. There's a trigger off the lows from Tokyo last night I'd be looking at. Stop would be against 72.34. Target would be 72 into 72.05. It's too tight for me. It's too tight for me to get involved. And the only reason, Mario, is because I don't have a resistance level here. If we were at 72.40, sure, much more compelling. But ahead of the US Open, I'm not at resistance. Support is pretty close by. It's just not something I'd be interested at this point. Look for the drop into 72. That's going to be the near-term support. Did we go over Aussie yet? Just a quick note for the Aussie dollar. I'm not sure if we covered this yet in the webinar. I don't think so. Here's what Aussie looks like on the daily. Okay. Really big region of resistance was 71.77 into 72. We broke through that. Again, like I said, that's going to be near-term support. Also, I just want to highlight one thing. This 2001 trend line, we've sailed through it a couple of times, but if we take this all the way back to that 2001 low, okay, we tagged this again back in 2008, 2009, and we broke it earlier this year. Back in August, pivoted back above it, failure. Here it is again. It's the red line here that you're looking at. In today's low on the pullback, rebounded right off that region. So I like it above 72, looking for a stretch into like 72.60. Here's what the intraday chart looks like. Here's what it looks like, or it looked like yesterday on the intraday update. And again, the top side bias was in play well above 71.18, 71.10. Near-term support 71.50 actually held like a charm on that pullback. Okay, as momentum held 60 as support, not even as resistance, support. That's a really strong signal. If we look at it on a 5-minute, there was the trade. Okay, even on that pullback last night, even on the 5-minute, momentum failed to hold below 60, or below 40, rather, excuse me. Then you got a resistance trigger break to the upside. That resistance trigger break came in with a break of the Asia Pac opening range. So right off the bat, objectively, you're looking higher, right? So the targets that we noted last night, 71.80, 72.06, and then 72.40 is the next level. And like I said, that's what we're just shy of. So let's see if we can get some kickback on this. I think you get that stretch higher. Major key resistance on this is 72.65. Major confluence. And I just want to zoom out real quick. I know this seems a little bit more complicated, the chart, because there's a lot of median lines here, but they've been working very, very well. So the operative one that I highlighted in the report is this one. Okay, and that's just off of the lows that we made last week. There is this one in gray, a broader one that we were looking at. Still looks good, but you can see all the confluence regions have been very, very tight. So long story short, all of those start to amass or start to converge up here near 72.60, 72.80. So quick note on the Aussie. Any questions on Oz? So Mario, I hope that helps. Something to keep in mind. Eileen says EuroCAD trigger break is a wait until 5-minute breaks, 60, or a trendline break. On the EuroCAD, here's EuroCAD. Yeah, I mean, I would be looking for either another hold at 40 and a momentum trigger break to the upside at the lows. So let me say this, Eileen. This would be something I'm interested in right here. If we pull back lower, again, your stop would obviously be against the weekly low, and you see a trigger break to the upside, that might be a decent play, even until just the range highs for London takes you all the way up into 46.60. So in and of itself, that's a decent scalp. You're looking for about 43 pips. But again, it's counter trend at this point, okay? Because momentum held 60 last night in on the 30. We broke 40 again. This is the beginnings of a 40 bounce. So if we get the 60 break and we see this trigger give out on the 5-minute, it might be a decent play. As far as getting on the short side, you're just above support, so I can't really advocate for that either. Of all the trades that are highlighted on the intraday, Eileen, EuroCAD is the one that has me more sidelined than anything. In and out of Aussie. I've been in and out of sterling yen even, but not EuroCAD. I just it's acting a little funny at the support here. So either look for that support to hold. If we penetrate deep into 46, as far as trying to short it from there, I got no play for that either. A lot of these guys, and the reasons we put out so many setups on the intraday on a daily basis, by no means am I scalping 5-6 pairs a day, right? You want to cherry pick them, the ones that are best positioned for a proper risk to reward probability. Also, I do want to just encourage you guys, go ahead and jump into IDO. Before you take a trade, go and look at what the one-day projections are. If it's showing a relatively strong performance, then sure, it'll give you further conviction. But for EuroCAD, I still think I'm favoring the long side. I want to see a little bit more of a conviction turn here. Mario says, general question. I got a general answer for you. He says, would you take a short trade if you get a trigger on the 5-minute, but on the 30-minute RSI is over the 70 level? Great question. If we're at resistance and there's a technical barrier up there, yeah. Yeah, because a 30 trigger, guys, is going to be way delayed. When I'm looking at these triggers, guys, I'm looking for this to dictate general bias. I'm looking for this to dictate broader medium-term direction. Remember, RSI only gets pegged to its location when the candle closes. So until this 30-minute candle closes, I can't make any assumptions on momentum, right? So I don't want to take a break of resistance or a break of a trigger until that candle closes, because it can break right through, pull back, and this thing will look like it never even happened, which is why we jump into the 5-minute trigger, even the 1-minute triggers. That being said, Mario, one thing I always want to stress, man, momentum indicators, RSI, stochastics, CCI, all these things are lagging indicators. They tell you what happened, not what's going to happen. So for that reason, I never want to put too much emphasis on it, right? It's there for my assistance, it's there as a tool. So if a trigger is giving out in a 5-minute, price is at resistance. If the 30 is showing overbought, that's going to take 30 minutes to pull off from overbought. So I'm not going to be able to really get a valid signal on what the immediate bias should be, right? If price is at resistance, price is at resistance. Nothing supersedes basic support and resistance. I really can't implement that or stress that enough. These momentum indicators are there for our benefit, but if price is at resistance, we get a 5-minute trigger to the downside. My bias is short, the broader bias is short, something like this. Yeah, I take it. Does that make sense? Bill, I want to make sure or Mary, I want to make sure on the same page. That's a great question. And you're going to get situations like that all the time, guys, where you have something in overbought or one of our factors that we're looking at is not lining up. That's okay. If the picture is too cloudy, very simple. We have tons of other setups to look at, which is why you want to cherry pick. If you find yourself in a scenario like that where the 4-hour or the 30-minute isn't overbought, but you're getting a 5-minute trigger, that's something you want to pay attention to. Mario, the only thing I would add to that, and I know I've gone over on this for a minute now, but the only thing I want to add to that is this: if the hourly or the 30-minute isn't overbought, typically the trade is constructive. Typically, on the longer term time frames, when something is overbought, typically that's constructive. A 5-minute chart will go overbought, oversold 10 times on a daily basis, but a 30-minute won't. So on that basis alone, Mario, the trade bias would probably be constructive. So if you would take that 5-minute trigger on the short side, you want to make sure that it's half leverage and you're treating it as a counter trend scalp. We treat counter trend scalps with a lot lighter of a load on the leverage because you're not positioned in the broader trade, in the broader trend. So just a note of caution there as well. Mary says, great, thanks, more than welcome. I'm sure that a lot of other people in the room had that same questions. He says, that was my worry, the constructive idea. So yeah, always something to keep in mind. Eileen, thanks on that. Bill wants to look at sterling CAD. So any other questions before we move off? We're going to definitely take a look at sterling CAD on the Aussie. Beautiful setup, looks pretty good. Look for some resistance heading into the US opening range. You'd really need to see a break back below 72, back below that median line to get a little bit more of recovery. And at this point, we're going to bring up the bullish invalidation level to that lower median line parallel. Former highs, 618, takes you 7150. Bill, here's what sterling CAD looks like. I haven't actually looked at it in a while, so let's take a quick gander. Well, you're in a downtrend. I do want to just take a measured move here real quick. It's way down there. Well, it's in a downtrend. I'm not sure I would have a play on this one. Let's see what the 30 looks like. Give me a day to work on this for you. I don't have anything here that's standing out for me as a trend that I can jump in right now. I can tell you that there is a pending short trigger, which I wouldn't be too crazy about getting on this late in the trend, maybe from a scalping standpoint, but also, the way I would be looking at this, we haven't even really broken the opening range for the week. Here's your opening range high that you set on Sunday. Monday's low basically came in here, and you've just been sitting in that range ever since. So I would be looking for a little bit more of a break near term for a directional bias. I would say that the momentum does look a little bit more constructive here. You can see that on the pullback, we held ahead of 40 on the break, again above 70. It's the first time that we broke 70 on an intraday basis since back here. And that was the beginning of September trade. You saw a decent rally here before the breakdown. So I would say, there's a little bit more of a risk for at least a test of the weekly opening range high. But I don't necessarily have a play here for you. So Bill, I'd be watching this one over the next couple of days once we clear the opening range. Till then, use some caution. It is a wider range scalp. The broader trade is to the downside, so don't really have a setup there. He says, thanks a lot. Hey, you're more than welcome for what it's worth. I wish I had something a little bit more compelling for you, but an interesting pair because we're constructive. And look at the relative performance as well, Bill. We're constructive sterling, right? We were holding sterling longs and dollar CAD short, which is a CAD long. So not too surprised to see sterling CAD sort of chop sideways. All right, I just want to take a couple of minutes and go over some of the commodity trades. There is something here that's happening, guys, I think that we want to pay attention to. If we look at the gold trade, first of all, equity markets, global equity markets are pretty buoyant today. They're mostly in the black. You have Dow, S&P, NASI, excuse me, equity futures also looking poised higher. Got about 13 points on S&P. Dow's up by 120 ahead of market open. But you get the picture, right? Here's what gold is doing. This is the operative slope we've been working with off of the, excuse me, highs from 2014. All right. We're checking it as resistance. It looked like we closed right there yesterday. The rally rebounding today, just ahead of the 786. In fact, this is the hot day close for August. If you bring this into a 764, I bet you is the exact high. Yeah. So this whole region is an area of interest. The high day close for September, or what is this, August, and the 764 of that decline. The close today is going to be paramount. I do think gold is doing something very interesting here in that we're seeing it's essentially a range, but off the lows, there is a little bit of a change in behavior. So we want to keep that in focus. If we break above this region, you'd be looking for 1162, and the big resistance for gold is 1170. So here are sort of the near-term targets you want to look at. On the intraday for gold, we've been tracking that one as well on the radar charts from last week. Here's what the intraday looks like. Remember, we talked about this in Monday's webinar, really clean opening range break. So for, who was that asking earlier about the opening ranges? I think it was Valentina. The opening range here for gold, super clean for the week. This is NFP Friday, so we're going to automatically scratch event risk, but here's your open for the week. You slide into a low on Monday, into the open of US trade. You test the high. We sit in that range for another day and a half. Yesterday's break, cleared the highs. You're constructive near term above 1141. So you could see the pullback here go a little bit deeper to the downside. The broader trade, in my opinion, stays constructive well above 1120 at this point. It's going to be a nice pivot in price, the 618 off the low and the median line, lower median line parallel. Now, this picture is very interesting also when you take a look at the SPX. SPX today putting in already an outside day. I'll be looking for a stretch higher here towards that median line that we used off the highs. That comes in right around 2000, 2010. You have the 55-day moving average, which comes in at 2002. This is an area to start to look for a little bit more resistance and then a possible move back to the downside in broader risk. But Bernard, I don't know if you're in the room here today. You are. Bernard, great to see you. Here's what the DAX looked like. We went over this yesterday. Guess what? That resistance level confluence broke. We closed right there, but here's today's rally. So at this point, you're testing a basic 236 off the high, 10,031. A breach above that and you'd be looking for last month's open right here at 10,239, backed by that median line off the lows. So a little bit more confidence in this median line because we've actually seen a reaction off it already, off that slope. So Bernard, as far as the DAX is concerned, I'd be watching that region of resistance near term. Next target really is until 10,239. So if you get the break, looks pretty good. Last but not least, oh, we went over the S&P, right? We got that one as well. So those are the three markets that I'm sort of focused on. Interestingly enough, if you look at the FXI, this is the large cap ETF I was talking about earlier in the session from China. I'm sure Jamie's going to talk about this later today with you guys, but if you look at this multi-month trend line or median line formation we've been trading in, the slider of that same slope caught the lows that we made here earlier in the year in August. That was the low for the year. Momentum, really sharp move here, breaking 60 to the upside. We'll want to see the daily close here. But the move, breaking this confluence of the median line off the low, this is a shift formation, and the upper median line parallel. Long story short, you could see this thing spike into a high, near term pull back, and then continue on its way. So that puts broader risk all essentially moving together, right? Mark says, do you have time to check oil? I do for you, Mark. We are over on time, but let me take a quick look on oil. Jamie's going to go over this much more definitively with you guys later today, midweek strategy webinar at 1 p.m. But I just wanted to bring your attention. It's broadly the same trade, guys. Look for a pullback, then pushed into a new high here on most of these equity indices. Or excuse me, push into a high, then look for a pullback on most of these equity indices. As far as crude is concerned, I knew there was one more commodity I was waiting for. Here's what crude oil looks like. So making some noise this week. Finally breaking the range, 47.20. I know everyone here on SB, we've been looking at this range break for the entirety of September trade. If you were here and you asked about oil, the only thing I said to you was watch 43.50, 47.20. Well, we sat in there right into the close, and here was the break yesterday with a continued move lower in dollar CAD. All the same trade, guys, which is why we need to pay attention to what's happening in broader risk. So the break above 47.20, that's the first target right there. 49.30 is the high from August. Next objective move is 50.13. That's a 50% retracement of the entire 2015 trading range. And it's backed closely by, what is that? The 100-day moving average. That comes in at 50.38. All right, so beautiful move and finally clearing the way here for crude. You could get some pullback from here at this point. You'd stay constructive about, above that same level, 47.20 or so, the median line. But it stages, it sets the stage for a possible real advance or a stronger advance higher in crude. One extension I would want to look at this point, now that we've broken that high, is just a basic extension off the low. If we do that, look where the 618 comes in. Same region. All right, so levels are pretty clear. This is just a high. I want to go ahead and get rid of that. Just put a marker there. It'd be a little bit easier. But those are the levels I'd be looking at for crude oil. All right. Hope that helps, Mark. He says, thanks for crude and a most instructive session today. Hey, the pleasure is all mine. Guys, we'll wrap it up there. We'll be back on tomorrow morning, 8:30, same time for a final webinar this week. As I said before, don't miss Jamie's intraday strategy webinar, midweek strategy webinar today at 1 p.m. Best of luck trading. Again, as far as data is concerned, tomorrow we get the Fed minutes, so there's not going to really be any major U.S. data today. As far as crude's concerned, Mark, do keep in mind that inventories are on tap for 10:30. Best of luck trading, guys, and we'll see you tomorrow. Cheers.